right, everyone. Thank you very much for joining us today. We will be exploring how to invest in Bitcoin and other cryptocurrencies through your IRA and 401k accounts, how it works, the different functions of cryptocurrency, and some of the basics of what it is, how it works, also how these accounts can actually invest into it, and the tax considerations that are the ultimate impetus for using these types of accounts is as well. So please do type in your questions. The raise hand function and the ability to speak in your questions have been disabled for this presentation, so type them in. I will address them throughout the presentation. My name is Alex Burnie. I am a certified IRA services professional here at Advanta IRA, a member of the American Banking Association, and I've been doing self-directed retirement plans, just 401ks, IRAs, and any other type of real qualified retirement plan for going on my 6th year here. So I have a good basis of knowledge. All of my knowledge and experience has been directly in non-traditional assets, so things that aren't publicly traded, that are closely held, hard to value underneath of these tax-qualified plans. So feel free to ask as many questions as you'd like. I am happy to get into anything, even if it's slightly off topic with regard to cryptocurrency in general. If you have questions about other types of alternative assets, we can certainly cover those as well. And again, please do make sure that you type your questions in, as any functionality with the hand raise function is disabled as well. The required disclaimer, as always before any type of presentation on financial topics, Advanta IRA and our employees, we do not provide legal, tax, or investment advice, nor do we endorse or promote any products. All the information and materials provided here today are for educational purposes only, and we encourage all parties to consult with their attorneys, accountants, and other financial advisors before entering into any type of financial agreement or investment. So there are a few key points that I want people to take away from today. What are cryptocurrencies? Not just Bitcoin. There are many different ones out there. There are new ones coming out with relative regularity on the actual scale that they're coming out. So just be looking for them, to be present, ever present in the coming markets. The basic functions of buying Bitcoin and crypto with regards to other type of cryptocurrencies, and how these currencies work and how they are stored after you actually purchase it. Because unlike where you go to an ATM and withdraw cash and you have a physical piece of tinder in your hand, these are inherently all digital. They are based on an electronic platform. So knowing how that works after purchase is a very, very important aspect of this whole topic. We have 2 locations. If you have any questions, we do operate nationwide and worldwide, but if you are local to one of our offices, we encourage you to schedule a consultation. They're always free. Feel free to come in or give us a call. We have our main corporate headquarters located right next to Clearwater, Florida in Largo, and our office in Georgia is in Atlanta. So what is Bitcoin and cryptocurrency? So the basic fundamentals of a cryptocurrency, and especially Bitcoin being kind of the predominantly looked to pioneer of this type of asset, is that it's a self-regulating currency platform, or for lack of a better term, investment platform that doesn't rely on any type of centralized bank, although it does rely on a centralized network to actually regulate itself, which allows for transactions and investing on an instantaneous and global scale. So the nice thing about it is you're not reliant on a corporation that has a profit margin in mind that is operating in their best self-interest to serve you. It is a marketplace of individual investors and users that are actually self-regulating and promoting the actual platform to further its dissemination, if you will, into the actual marketplace. The IRS addresses what exactly this is because, as we'll get into later, cryptocurrency, although it is referred to as a currency, really is more of an asset than anything else. It is property that someone were to own, because in all honesty, and for at least the very much foreseeable future, the only thing that can really be classified and used in the traditional sense as currency is just that. Things that are issued by a centralized banking system, such as the US dollar, the euro, British pound sterling, ruples and things like that, those will actually, will typically always be the things that are going to be, actual currency. The IRS specifically addresses this in 2014 in a referendum where they define virtual currencies, and this has to do with Bitcoin and everything, any other type of cryptocurrency, as personal taxable property, meaning that for the purposes of holding it and selling it, it is going to be treated just as personal property would be. So just like someone can buy property, they can buy a piece of real estate, just like someone can go to the store and purchase milk. It is something that you physically own rather than an actual currency for the purposes of taxation, which is really good from the standpoint of the investor, meaning that they can now look to the IRS that they have guided them in exactly that they are qualifying this as a asset, so therefore we can utilize that under tax-exempt entities and tax-exempt plans such as IRAs, Roth IRAs, 401ks, and any other number of tax-favored type of plans. So really good information, and the nice thing is that they've actually looked at this as far back as 2014, so they actually have a good basis on it. Now there are some ongoing regulations and things that are coming out with regard to how these types of assets are going to be treated on exchange-traded funds, ETFs, and different types of marketplaces. The Futures Trading Commission in the United States has readily agreed, typically with most of their publications, that it is something that they are going to further look into, but as of yet, they're still kind of going with the initial judgment of the IRS and treating it as personal taxable property. So a little bit of history, especially with Bitcoin, since it is essentially the founder, if you will, of the cryptocurrency movement. There have been a few other ones, and there were a few iterations of Bitcoin before the now commonly utilized platform, but it's important to understand where this comes from, because not only does it explain what this new item is and how it works in the marketplace, but it also furthers the understanding of why people utilize this and what makes it attractive to individual investors, to entities, to governments, to businesses. It really kind of goes to show that. So the initial paper that was published that was first expounding on the platform of having a digital currency was published in 2008 under the assumed alias of Satoshi Nakamoto. Now, there is a lot of debate onto who this actually was, because that never actually has been definitively proven to be a single individual. There is some thought that it could have been a group of coders, that it could have been one singular individual, but it's interesting that it's actually kind of it certainly is a market-driven idea that this was initially put out and then developed by its place as open source information. Now in 2009, we have the first version of the Bitcoin peer-to-peer network is released. There was some issues with the first one, and then initially they get it to where that they have the Bitcoin, the blockchain verification processes and everything else are really implemented and put out in the 2009 version of everything. And from the initial onset of 2009 to right about the middle of 2011, it was extremely low on its value scale. I mean, we have everything from cents per Bitcoin to all the way up to 50, 75 cents. But in the middle of 2011 is when initially the Bitcoin attains parity with the US dollar, meaning that it trades on a scale of 1 bit to 1 US dollar. And that's really important to understand, because you can see from where it attains parity in 2011 to today, when the spot price that I pulled before this presentation is $5,670 per full bit. It really goes to show the acceptance and the amount of value that this is actually increased by, not just for the simple fact that, yes, it goes from $1 to almost on the better half of $5,500, but it shows that the only way that this attains value is by people actually accepting it and it becoming a utilized thing in everyday life. Because with this type of platform, the people that utilize it, the users of this platform, are what give it the inherent value. It is not a centralized bank saying we're going to produce more currency. There's only a finite amount of Bitcoin out there. So the only way to drive the value of it is to drive user base and user acceptance of this. So with people looking at, is this a good idea for me, or where do I want to look to see if I want to actually make this type of investment, whether it be with an IRA or personally, the market is driving its price by its acceptance in the market. So the inherent fact that it is rapidly increasing in value goes to show that more people are utilizing it, more businesses are utilizing it, and it's becoming a more accepted form of investing and to a better extent, currency and trade facilitation through multiple different platforms. Now, some people ask, well, why do I want to use this? Why do I want to invest in Bitcoin? Well, there's a lot of different drivers, if you will, in the market that would essentially lead someone to say, you know what, this is a good choice for me. But some of the interesting points that I personally find very intriguing are that there's a large lack of bank interaction. You don't have to rely on a centralized company that is in the business of making money to handle your transactions. I don't have to go to a bank and rely on what they say is going to be doctrine for my money. I can utilize a platform, and to an extent, if I don't like the way that Bitcoin operates or I don't like the way that Ethereum operates, I can find something that actually works for me, that has a marketable base to utilize a platform that works best for what I'm trying to accomplish with it. You also have the potential to have a slight hedge against inflation, whereas you really have the market has no control over whether a government is going to inflate or deflate their currency values. With a user-driven platform such as Bitcoin and Ethereum and Litecoin, Monero, any type of cryptocurrency in general, the inflationary rate can be directly controlled by the amount of mining that's done. So the amount of new production that would essentially dilute the value of the currency can be controlled to a certain extent by the users themselves. So it can be a self-regulating market that has the potential to protect against typical inflationary drivers in the typical monetary marketplace with regards to governments, and especially with emerging countries or emerging markets or countries that have a bad inflationary deficit with regards to their foreign exchange with other countries. It can be a big benefit for companies and individuals that are trying to operate out of those bases, not having to rely on extremely unfavorable exchange rates in order to do business across multiple continents, countries, or even within their own market. However, it's not all just a huge upswing and a huge benefit, because whereas if someone comes out in the news and says something bad about the US dollar, you really don't see too much of an effect on that typically. However, let's say there were to be a large news article in a very respected publication that was demeaning or otherwise had negative information about a type of crypto, we have seen that directly affect the price of some of these cryptocurrencies, such as Bitcoin or Ethereum, in a very negative way. So whereas you are giving up some of the protection from, let's just say, the market having bad things to say, or just the population in general with regards to how people view this, you do have some protections of inflation, but there are other ways that this can be affected as well. Another thing with regards to anonymity, one of the big things in today's culture, and especially with our societies and how we deal with things, one of the biggest issues is identity theft and people utilizing other people's identities for fraudulent activities. One nice thing about cryptocurrencies is the ability to remain partially or completely anonymous depending on the platform you're using. You have a much higher degree of anonymity that can be attained while utilizing, trading, and participating in a particular crypto platform. So a very important aspect is the ability to protect your personal information. And then lastly, at least for the personal aspect of it, is the ease of payments to individual and investors without the need of banks. So you actually get to participate in business and investing without having to potentially pay several intermediaries for the service of moving money from one individual to another. And it goes across platforms from business and personal aspects. If I am able to send a Bitcoin payment to a vendor, let's say in London, I'm not going to have to pay international transfer fees. I'm going to be able to trade on parity just with the value of the Bitcoin to that individual for the goods or services provided. And I'm not going to have to pay banks on each end. And typically people are going to charge you about $60 for an outgoing international wire. And the bank on the other side is going to charge the vendor, maybe $15, $20 according to US dollar conversions roughly in order to receive that money as well. So those kind of fees are going to be directly factored into pricing that you're going to pay, because if individuals and businesses are going to have to charge higher fees based on the amount amounts that they are charging for their goods and services, can really go to show how this can help stabilize prices and even make it a little bit cheaper to do business. Gary asked a question, any thoughts on the U.S. government banning Bitcoin and cryptos just like Russia did? I would be highly leery of that, just with the general acceptance that the United States government has put towards people investing in cryptocurrencies, with the IRS, accepting cryptocurrencies as personal property in 2014, and then further examinations of exchange platforms and acceptance of certain ETFs for dealing primarily in Bitcoin. I really wouldn't see that being an issue, and especially with large trade partners such as many in the European Union as well as China examining it for more involvement. I really wouldn't see the U.S. Backing out or doing anything derogatory towards this type of investing. But good question, Gary. So international and businesses, they have the ability, again, to reduce the amount of overhead and fees that they are being charged by their banks by utilizing Bitcoin. Because essentially, they are taking the services that the bank would provide to them and bringing them in-house. The more times that you can essentially vertically integrate a process into the company itself, the cheaper you can make a product. Look at Henry Ford with the assembly line. You can do that with your banking. With cryptocurrencies, you have the ability to take that financial processes and how you are handling payments and receipts and do it much more closely. Phil, do you have to call in or use your audio? There is a plugin you would have to download, but we do see you there asking. So, and then again, less exposure to exchange rates negatively affecting margins, and businesses can reach more customers across greater distances by accepting Bitcoin payments. If you have potential customers that live in an area that has highly unfavorable exchange rates, that would be a good candidate for your goods or services. Maybe it's something as good as getting water filters to areas in to governments in Africa that have highly unfavorable exchange rates with your current market that avoid purchasing foreign goods for that exact reason. You would have the ability to create trade where there otherwise might not be any, because you are effectively eliminating that negative exchange rate between the two people. So whereas some people only look at it as, hey, I can buy a Bitcoin for this price and sell it for that price, the avenues that it opens up for global trade and the ability for people to interact in many different ways is one of the most interesting facets, at least in my personal opinion, that is accomplished by utilizing cryptocurrencies. So now the key components of Bitcoin, and for the most part, these components are going to be similar across all crypto platforms. There isn't any one prescribed method that is going to apply to each one of them, but the initial papers that were published for Bitcoin back in 2008 and the initial structures and learning experiences have all kind of been rolled into the newest ones that are coming out, and typically they're referred to as ICOs or initial crypto offerings with the new ones that are coming out. But we're going to focus on Bitcoin because it's really the oldest out there. It's the most proven, and by the extension that it is trading significantly higher than the next closest competitor goes to show that. So you have essentially three main components of when you go to purchase Bitcoin, and there's another aspect in there as well, but we're going to cover the three components of the actual Bitcoin. You have to have somewhere to store the Bitcoin, how you actually exchange the Bitcoin on the blockchain, and then how the transactions are approved and how new Bitcoin is actually created, because there is only a finite amount of Bitcoin that will ever be available for use, which is pegged at 21 million. So there only will ever be 21 million out there. And currently, we have mined, I think roughly half of it has been created. So I think it's between 11 to 12 million currently in full circulation that has been utilized. So a wallet. It is the essential glass-faced safe deposit box that holds your Bitcoin. So when an individual goes to purchase Bitcoin in their IRA, they after they have purchased it, it will then in turn be held in their Bitcoin wallet that the IRA holds the title to. So this is how we as the IRA administrator show that the IRA has a valid and enforceable claim to those particular Bitcoin, is that we make sure the registration when the client goes and actually opens up the wallet is done in the name of the IRA. Now, your IRA is not out there for everyone to see. It is protected because what everyone sees when they see the transaction that is posted to the blockchain, they only see that an alphanumeric string ID has purchased a certain amount of Bitcoin and is holding it in a particular wallet. Now, how exactly is that registered? Well, in order for everyone to have the open and transparent access to this platform that essentially it's built on, all the transactions are done through what's called a blockchain. It is the public and audited transaction trail of each Bitcoin that has been spent between each address and how much each address holds. So again, remember I said that your wallet essentially is a safe deposit box with a glass face. That allows people to see that this end user has received the Bitcoin from another address as well. And then the blockchain is where that transaction is stored. So that way you can see that no one has double spent or double transacted a particular bit. This is the fundamental system that Bitcoin is built on, and it provides the continued audit trail to ensure that no double spending, of course, occurs. So now, what exactly goes into proving everything on the blockchain? Well, that's where mining comes in. So when my wallet says that they're going to send a certain amount of Bitcoin to another individual, I utilize their address, I input their address, and then I send it to their particular Bitcoin wallet, which has to be registered on the blockchain. Now, that transaction will not complete until a mining process of that particular block has occurred and all of the transactions that go into it have been confirmed. Now, keep in mind, the cool thing about this is that for each confirmation of a particular block to happen, it has to include a copy and a register, or what's called a hash, of the previous block in it as well to verify that each person that is sending it had received it in the past. And this is what actually creates new Bitcoin. The miners that actually go through and confirm each one of these actual transactions through the blockchain are rewarded by a certain amount of Bitcoin. Now, the amount of Bitcoin that's rewarded is continuously decreasing as the amount of transactions are continuously increasing. So it creates the market for people to come in and try to do it as quick as possible in order to get those bonuses of Bitcoin to receive those bonuses of Bitcoin from doing the mining and confirming all of the transactions. Now, that's a lot of information, but how does it necessarily work for the IRA investor? Essentially, what the IRA investor or the 401k investor needs to know in this aspect is that when they go to select a wallet, they just need to make sure that it can be titled in the name of the IRA. Everything else is kind of ancillary because the blockchain and the mining processes really aren't anything that the IRA directly is involved with. But it's always good to know that that is a part of the aspect of investing in it. Just like if someone were to go and buy a piece of property, it's good to know what the steps in purchasing a piece of property are, not just giving someone money and receiving a house. It's good to understand the different aspects of it. Question from Gary. Does the IRA allow a cold storage wallet such as Trezor that is in possession of the IRA owner? So yes, but not necessarily in that aspect. So if you wanted to have a cold storage wallet provider, meaning that all of the keys are kept in cold storage, offline in a hard media platforms, you could certainly do that, but that wallet would have to be titled directly in the name of the IRA, not the IRA owner. So you certainly could use the same platform that you do, but it would need to be a separate wallet there. But the IRA could certainly hold a cold storage wallet. That's not a problem. And I've seen clients have, different directions that they want to go with. My one key piece of information that I would give anyone when looking for your wallet provider, just make sure that they can title it in the name of an entity. So with someone like Trezor or BitGo, I would just say look for someone that has experience in dealing with businesses or entities, because they will most likely, when you go to give them the information for the titling of the owner of that wallet, not just want a first and last name, but allow you to correctly put in the name of the IRA as the titled owner of that wallet. But great question, Gary. So is it a currency or an asset? Now, this is the really big sticking point, is that it's referred to as cryptocurrency. It's Bitcoin. All of these words that center around it actually being like cash, although you can use it for trade and business aspects and actually pay someone with it. For the purposes of your IRA, it is an asset. Now, what does that mean? Because it is an asset, you cannot utilize it for a contribution to your IRA. I can't take personal Bitcoin and then contribute it into my IRA. So the IRA considers this as, so to back up a little bit, the reason you can't use that for a contribution is that it has to be done with cash only, according to the IRS. And that cash has to be in the form of US dollars. It can't be in any other foreign currency, and it certainly can't be in an asset. You can't make an in-kind contribution to your IRA. And the other reason is that you have to have a fair market value base for the distribution from the IRA as well, because anytime that we do a distribution from your IRA, it has to be done based on US dollar value. So the Bitcoin with a changing valuation essentially wouldn't qualify on either of those fronts. And remember, just as with any asset, our key goal in this is to make sure that your IRA, if it has purchased an asset, has a valid and enforceable claim to that asset. So just like we would ensure that a client's IRA is correctly titled on a deed to a piece of real estate, we are mainly concerned with the Bitcoin wallet or the cryptocurrency wallet, that one, whatever the client has directed the exchange to purchase with their IRA funds has been purchased correctly, and that the crypto wallet can indeed hold those different types of cryptocurrencies. Because keep in mind, not all wallets will integrate with different types of cryptocurrencies. Typically, ones that will deal with Bitcoin will also deal with Ethereum or Ether, Litecoin, Monero. Will have a couple different currencies that they can actually handle, but it is ultimately up to the client to make sure that that wallet is correct for what they're actually trying to purchase. And again, our main goal is to make sure that the IRA is properly titled and has a correct claim to that wallet after they purchase the investment. So one thing I do like to give to people as a bit of information is more of an understanding of how you actually move money into an IRA to do this, because they do inherently differ, and ultimately some people kind of get confused with just utilizing direct rollovers and transfers interchangeably. If you have a 401k, you have to do a direct rollover. There's no getting around it. A rollover is what has to be done, and it is a reportable event. Okay, actually, Ron asked a good question, and I'll get to that in one moment. With a custodial transfer, we can do those between IRAs, Roth to Roth, traditional to traditional. They are non-reportable and non-taxable. So just a good idea to understand the basic differences between those two types of movements. Okay, got some good questions. We're going to cover those before we get into this slide right here. So let's see. Ron asks, who issues the 1099-R? Advanta would issue a 1099-R for any type of distribution out of an IRA. So if you do have crypto in an IRA, and let's say you either wanted to take it out personally, we would issue the 1099 for that movement of either crypto or cash out of your IRA to yourself personally. Gary, excuse me. Once the crypto is in the IRA, can it be exchanged into alternate crypto? Yes. Essentially, you would be responsible for finding an exchange platform or finding someone to exchange whatever crypto you had into another type of cryptocurrency, and also making sure that your wallet would be able to hold that type of crypto. What might be a little bit of an issue in that is seeing some documentation as to the exchange of that. Different type of IRA structures might help with some flexibility with that, but there really isn't any issue in doing in-kind exchanges of, let's say, Bitcoin for Monero or Litecoin for Ethereum. You can make it work. It's just one of those things where I would encourage you to make sure that whatever you're doing with the other individual or entity is properly documented with either a contract or a purchase order or something like that, and that the wallet that you're utilizing can in turn hold it. Or if you do need to set up a new wallet, making sure that is done prior to and correctly held in that particular wallet. So making sure that's done prior to. Andre asks, what about a thrift savings plan? Certainly, a thrift savings plan is the governmental the government's retirement plan for armed service individuals. So TSP, thrift savings plan. It can be directly rolled into a traditional IRA with no tax or penalty consequences. Also, they do have a component for a Roth in there as well for armed service individuals who participated with imminent hazard pay. They can have elected to put that into a Roth account in the thrift savings plan. So sometimes you have multiple different types of monies that are in a thrift savings plan, but you can certainly roll those into a traditional or Roth IRA for that. Steve asking, how do you charge for service? We'll get into that right at the end, so I'll show you how it compares to different ones in the markets, but it's typically significantly cheaper and a lot more flexible. So just put a pin in that one, Steve, and we will get to that right at the end. I think it's actually covered on the last slide. So what type of plans can you utilize to invest in cryptocurrency? You can really use any type excuse me, you can really use any type of qualified retirement plan, and I've enumerated several on the slide here for you to look at. The traditional IRA is really what most people will look at. It's tax deferred, meaning that you don't pay any taxes for contributing money into it, but when you take money out, you pay taxes at your marginal tax rate for that. Now, what does that mean? That means that all of the growth in the intermediary is completely non-tax. So if you had bought Bitcoin back in 2011 at $1 for dollar, and then it went up to 5,500 roughly today, you would not be paying any taxes if you sold. You would not be paying any type of capital gains or anything else like that. You would only be paying taxes on what you take out of that account just in your marginal tax rate. So if you took $1,000 out in retirement, you'd only pay ordinary income on that $1,000. Now, a lot of people like to look to the Roth IRA as the Cadillac of the retirement plans because it has the best benefits. Although it does have inherently extremely nice benefits in the end of its life cycle, some people might actually benefit from having the creation of more deductions for themselves personally. So the function of the Roth IRA not providing a deduction for contributions made on an earned income basis might not be as attractive to everyone. However, the ability to have qualified tax-free distributions in retirement is extremely attractive. So just like the traditional IRA, if you bought Bitcoin back in 2011 at $1 and then sold it today for $5,500 a bit, you wouldn't be paying any capital gains taxes, short or long term. And then if you distribute it, you also wouldn't be paying any ordinary income taxes as well. So you would just get completely free, tax-free growth on that money. However, to get the completely tax-free growth, you have to have the account open for at least 5 years. You have to be at least at the age of 59 and a half. So once you have satisfied those requirements, you can certainly participate in that, but it's not necessarily as easy as just having the traditional IRA, and you also didn't get any deductions for adding money in there in the first place. Now, for individuals that want to have slightly higher contribution limits, because with the traditional and the Roth IRA, it's either $5,500 or $6,500 a year that you can add money into those. Keep in mind that moving money from a 401k or a thrift savings plan or an old employer's plan into a traditional IRA does not affect your contribution limits. So transfers and rollovers do not affect the amount of money you can move over in one shot. Only your contributions per the amount of money you've earned in a year are going to be affected when you contribute. So you have $5,500 or $6,500 for individuals over the age of 50 and a half. You can add in an additional $1,000 per either traditional or Roth IRA. The traditional IRA, you do get a deduction for that. The Roth IRA, you do not. So for individuals that want to increase the amount of money they can contribute, that maybe are self-employed or run a small business, the simple or SEP IRA is a much more attractive option for that. They both offer significantly higher amounts of contributions. The SEP IRA being the newest iteration of the simple IRA, which is a little bit more antiquated. The max out for a SEP IRA right now is $54,000, which is based off a max out salary of $270,000, I believe. So you have the ability to add in considerably higher amounts of money to that. Also, the individual 401k offers significantly higher contribution limits with either $18,000 or $24,000 of personal income being added in, and then as a profit-sharing match of the company you've established it for, up to 25% of the net operating income, not to exceed $35,000 per participant. So you can actually get up to almost $60,000 a year into a individual 401k plan for investing in really whatever you'd like to, specifically to this presentation in things like Bitcoin, Ethereum, and any other type of cryptocurrency on the market. Here's just an enumeration of what I just covered, at least with the amounts of contributions for those. And again, I do see some people using the hand raise function with the presentation. Please note that I do not answer those specifically. If you can just type your question into the chat box, I will address them as they are typed in. So now, what type of investments are out there? Well, maybe not everyone wants to invest directly in cryptocurrency, although you can specifically do that. There are different platforms out there that would allow for options, either betting on the price to go up or down of a particular cryptocurrency with not actually buying it. That type of investment vehicle is certainly out there for people. You have the ability to do margin trading, just like you would do with foreign exchange with certain platforms. And then, of course, there are the different types of cryptocurrency out there, Bitcoin being the most prevalent in our media and other types of publications, but with equal weight being given to any of the other types, such as Ethereum, Monero, or Litecoin. Just understand that the options for the investor are out there, that you're not just tied to one particular type of investing with this, that you can essentially take our platform and really make the type of investing work well for you. We're not going to necessarily say that you aren't going to be able to invest in a certain type of crypto, but we will essentially kind of try to guide you with regards to whom you can and can't deal with, because that's really where the IRS does offer some guidance. The IRS in a lot of their publications doesn't necessarily guide you to what you can and can't invest in with retirement accounts, but they do give guidance as to whom you can and cannot invest with. Let's see. Fazal asks, how are you able to put leverage inside of a retirement account? Are you asking how you're able to borrow money within a retirement account, or how you were able to lend money in a retirement account? If you can clarify that, I'm happy to answer it. So who you can and cannot deal with, meaning this is people, let's say your father had invested in cryptocurrency. Well, you could not establish a wallet in your IRA and then purchase that Bitcoin from his wallet with your IRA funds. He'd be considered a disqualified individual from you. Consequently, let's say your son or daughter did the same activity, or your spouse, you could not directly invest in any one of those. But you could buy it just off a general exchange market where you have established a relationship with a exchange company that will convert your US dollars into crypto, of course, then for holding in your wallet for you to exchange or do what you want with. So just understand that you cannot directly transact with any of your lineal descendants or ascendants, so mother, father, son, daughter, or spouse, or any business entities owned by those people as well. Okay. Got some good questions rolling in. Let's take some of these real quick. Okay, Marie asks, how liquid is cryptocurrency, or is it? Well, it really depends. It's as liquid as the market for it is. So the higher the price of a Bitcoin is inherent with the value and the utilization of that particular platform. So the ones that are trading at a moderate to high value essentially are highly liquid, meaning that you can sell, there's a market for you to sell your holding relatively quickly. But think about this just like something that is traded on a stock exchange. Obviously not as regulated and not as readily available markets, but if people are utilizing it and there is a market to keep the conversion rate to US dollars moderate too high, then inherently it would be extremely liquid because there's always someone out there willing to exchange it for either US dollars or another type of crypto or another type of asset. So from that aspect, I would say extremely. But keep in mind that if everyone were to stop utilizing cryptocurrency tomorrow, then it would be highly illiquid. But that's also like saying that if everyone wanted to stop buying real estate, there wouldn't be anyone to buy it, so you couldn't liquidate it. You have to take some of that stuff with a little bit of a grain of salt because it's just really with how many people are utilizing it directly determines the liquidity of that type of asset. Okay, purchasing crypto on margin or inherent leverage options. You would need to check with a particular broker as to what they are offering. You could kind of run it by us. We would need to see exactly what they are offering to see if that would be kind of feasible underneath of a retirement plan. Let's see. What exchanges do you suggest you use to convert your US dollars to crypto and vice versa? I would say any of the large ones out there. Typically, I've seen people utilize Coinbase. I've also seen people utilize Kraken, are two of the larger ones out there that I have seen and heard that people have had good use with. Again, the process works as such is that the individual client needs to go through the verification process of finding the exchange that they would like to use for their IRA, and then making sure that the wallet that is tied to that is directly named in the title of the IRA, and then all of the funds come from the IRA. So you place the order with the funds from the IRA, and then those cryptos are directly stored in the wallet in the name of the IRA. I would say with someone like Coinbase, and I've seen this happen, is that when you go through the confirmation process to establish an exchange account with Coinbase specifically, they offer a wallet platform, and if you just go through it, they will default that wallet into your personal name. Changing that can be kind of a nightmare. So what I would say is be careful if you are utilizing a platform that offers a wallet service as well, and making sure that when you go through it, don't just click a box that says, use my personal information for the wallet ownership. Make sure that that wallet, again, that's a really important part for us, is directly titled in the name of the IRA, because that is what will allow us to fund that exchange platform for you to actually purchase this and get the great tax benefits in your IRA. So great questions. Please do keep them coming. So considerations, and that is a good segue into the next slide of some of the considerations to give while choosing a wallet provider. So, can the wallet provider ensure that my IRA is properly titled as owner? What I would do is I would say, you can certainly ask us, what we look at. I try to do some research into these and see some of them are a little bit harder to do just for my testing purposes. But Andrew just asked a good question. Is BitGo the wallet you would recommend? I have actually gone through and created a test with them to see if I can actually put in our full vesting and everything with them, and it worked just fine. So I would say from that aspect, they certainly would do it, and I would probably say that would be one I would recommend for you to look at first. But the biggest thing that I would look at when the client is doing their research as to who they would like to use is see if that company has any type of literature on how they work with businesses or entities, because those are the ones that typically have the ease of workflow for titling things correctly, for being flexible with the actual name that things are held, and providing additional information. So the ones and the wallets that are specifically established for businesses, I see clients having better success with. And at least from my professional thoughts on that, or that is where you're going to find the most success, is looking for those types of providers. So great questions. And what is the cost basis of the purchase and the exchange and the wallet exchange? Depending on what service they're providing, the Bitcoin exchange, and if it's tied directly to a wallet, might charge you a small transactional fee for utilizing Bitcoin across their platform, and that's certainly something to take heed of, especially with in regards to our market, how much some people will actually charge for this, because keeping a good track of your cost basis for this is incredibly important, especially when you have things that are trading at such high levels. Making sure that you're not paying too many fees is key. Seeing what currencies that you're able to convert your cryptocurrency to, and also seeing what you can convert your US dollars to on that particular exchange and what that wallet provider will hold. So it may not necessarily be a benefit for, especially an IRA client, to find an exchange provider that accepts 30 different world currencies, but only can operate with exchanging into maybe just Monero if you want to do Litecoin, Ethereum, and Bitcoin, and the wallet providers that they'll work with will only hold that as well. So making sure that the exchange platform and the wallet, one, will work together correctly. Rakesh, let me finish the statement. Will work together correctly and will hold the types of crypto that you are looking for. Rakesh asks, what exchanges and wallet providers works with business solo 401ks? Again, it's really any of them. Specifically what you're looking for is the ability of the wallet provider to title the wallet in the name of an entity. When I've gone through and actually looked at this, and kind of going back to BitGo was the one I had the most success with, and I've had clients that have indicated to me that Coinbase has been able to do it as well. It's just making sure that the actual wallet is titled in the name of the IRA, or in that case, the 401k. And again, these questions are kind of lending themselves into very good segues. Here's exactly what I mean by how things need to be titled. So the ownership of a Bitcoin wallet. With an IRA specifically, and yes, at the end we will be going over how fees are assessed to this. And if you want specific quotes, give me a call after this and we can work through exactly what it would cost. But we'll show you exactly how they work at the end. I think someone asked in the beginning, so a few more minutes we'll get into that. So Rakesh, specifically to your question, this is really tying into what I'm talking about when I keep kind of reiterating titling the wallet correctly in the name of the IRA. So with all IRA assets, the naming convention that we typically use is Advana IRA for the benefit of the client's name and the IRA. If you're really concerned with personal information protection, we can redact your personal name from that and just be Advana IRA, FBO IRA number. That's fine with us. And that's what would need to be titled as the owner of that particular wallet. So when you register with the wallet provider and it asks for the name of the owner and the information for that, that is what the name of the owner needs to be titled as. Now, the actual exchange you would go through and do in your personal name, because you're going to be the one that places the orders for the buying and the selling of the Bitcoin. But keep in mind, since that money is coming from the IRA and all of the assets purchased are going into the wallet, that's just like you picking out a stock on a broker-dealer's website. That is the functionality that you have in that. So the actual exchange you title and go through the personal verification with. The wallet specifically is what has to be titled in the name of your IRA, and that's what we're looking for the confirmation on, is to have this specific naming convention used to make sure that your IRA has a valid and enforceable investment in the particular crypto that you've chosen. Now, with 401k accounts, the trustee of that plan is going to make sure that the wallet is correctly titled in the name of that plan. So there's a little bit of a different process that you go through with utilizing 401k specifically, Rakesh, and it's a little bit more in depth than I really want to make sure I present in this, because some of this stuff is going to be confusing enough for most people, and to add 401k naming conventions and processes to it would certainly probably lose some people. But give me a call, grab my number at the end of this, and we can kind of go through more depth. If anyone specifically has questions on 401k accounts specifically, we can certainly get into that in much greater detail. Those are interesting in their own right. So again, making sure that the IRA wallet is titled in the name, or the crypto wallet is correctly titled in the name of the IRA is the huge, and I can't stress that enough, is the most important aspect of this, because if we send money to an exchange and it is purchased and the wallet somehow is in the name of some other type of entity, it will just cause enumerative issues. So that's why we make sure that we need to get confirmation from you and from the wallet provider before we issue funds to that exchange that we have a wallet that is correctly titled in the name of the IRA. So again, that is where we really need to spend the most time, is making sure that that is correctly done. So how do you get Bitcoin in the IRA, in the wallet? How does it actually work? What is the mechanism of that? Well, you have to exchange it somehow. So just like there are broker dealers that will let you purchase stock and different types of securities, just like you don't walk up to Microsoft's headquarters and knock on the door and ask to buy stock, you utilize a broker or an exchange where you actually take your US dollars and purchase the type of cryptocurrency that you're looking for. So now, as I mentioned previously, that the wallet needs to be in the IRA's name, when you go to establish your relationship with the exchange, and two big ones that I've seen used are Kraken and Coinbase, going to them, you're going to use your personal information to confirm and place yourself as the individual that can select what exchanges you'd like to do. The wallet, remember, being tied to that is in the name of the IRA. So, and remember, the wallet acts as the bank account where the actual cryptos are held. Now, we send the cash from your IRA to the exchange. You select what you're going to purchase, and then those purchases are held in the IRA wallet. So IRA money to the exchange, you place the order. What is ordered and purchased on the exchange will then be held in your IRA's wallet. Now, the Bitcoin wallet in this instance, we've gone over what you need to do with regards to how things are titled and who owns it, but what is the Bitcoin wallet? This is actually where the actual verification of you holding the cryptocurrency or Bitcoin is held. Now remember that this is the safe deposit box with the glass front that everyone can see that this address has purchased something, but in order to get something out, you have to have the address and the security key for it. So this is essentially, where everything's held. It is the safe deposit box. It is what your IRA holds for the investment, is the ownership of that wallet that holds the particular cryptocurrency. Typically with these things, they'll have about 3 different security keys for them, one held by the wallet provider, one held in some type of, by cold storage or other type of offline security, and then one held by the client. So that is, very similar to how you would look at a typical safe deposit box. Is you go in with one key, has to match up to a lock with another one, and then you can remove things from it. And all purchases made by your IRA on the exchange platform will be recorded in the public blockchain to ensure a valid transaction. So as we covered earlier, the blockchain being what records and verifies all these transactions, your IRA participates just as everyone else does in that. So these are the 2 big aspects of what we're looking at, is the personal broker that you have established the relationship with, and making sure that that Bitcoin wallet is correctly titled in the name of your IRA. So some of the different options out there, we've kind of briefly touched on a few different ones, Bitcoin really being the first to market. And each one of these different types of cryptocurrencies has their own perceived benefits and drawbacks. Bitcoin being the most research utilized and otherwise prevalent one in the market, also is the most expensive. You're going to pay north of $5,500 right now for a single bit. Now, Ethereum has a slightly different structure, and then it has less reliance on third parties for exchanges. Now, Ethereum trades at a significantly less value, about $320 before this presentation. Litecoin, kind of basing its structure along the success of Bitcoin to be a much more familiar alternative to it, Litecoin trading at $60 per unit. And then Monero, for individuals that are much more highly focused on anonymity within their exchanges in cryptocurrency, currently trading at $94. So you can see how maybe the different aspects, the length that they're in market, and much different other factors can directly affect price. So you do have options out there, and each one of them is going to offer a slightly different perceived benefit to you as the ultimate investor. Andrew asked some questions about other exchanges that sell crypto. Determine exchanges that sell crypto other than I honestly haven't really done much research to that extent, but good question. I certainly will look into that to get some more information for our clients. Essentially, the question asks if I have a knowledge of any other exchanges that will exchange U.S. dollars for Bitcoin, Ethereum, Litecoin, or Monero. I honestly really haven't looked into that fact, but good point. I will certainly do some more research into that to give you some more options available. So how do fees work with all this? I know it's kind of the question that everyone probably wants to get at. Okay, get some good questions rolling in. Keep them rolling in. We're getting towards the end of it. The next slide after this, with regards to fees and structure, we'll get into Q&A. So just keep them rolling in. I will answer these two before we get into that. Marie asks, are the cryptocurrencies in your IRA shown as a number of each or a value amount? It would be value, it would be number essentially of each, and you would just need to provide us with an annual update to those values. We aren't necessarily going to be updating them on a rolling basis with the par market value. We would need to be provided with a confirmation of your Bitcoin wallet, so that way we can properly record keep what you are holding from that. But essentially, if you want to have them updated, we just need to at least the annual updates provided to us, so that way we can properly report the values of your IRA. Lawrence, can you sell short a cryptocurrency? Certainly, if you have a market where there is the ability to do a short or long sale on a type of crypto that you hold or that you are looking to purchase, you can certainly make that type of trade, but that would be more towards the exchange that you're utilizing or the individual or market that you're dealing in. There really isn't any type of issue with doing a short sale or doing shorting or long betting on values for purchases. It's just a matter of what platform is going to allow for that type of transaction to occur. So I would certainly be interested and excited if you could make something like that happen. But since we are not ultimately the exchange and don't make the market for something like that, it would be ultimately up to the client to determine where they could actually make a transaction like that happen. But certainly the opportunity is there. So, we allow for you to choose the specific type of wallet that you'd like. So specifically, we're going to assess our fee towards how many different wallets that we record keep. It is significantly cheaper than, looking at your account as a value, and we will certainly try to make it most fee advantageous from the standpoint of not charging a commission on the actual purchase of what you're doing. I've seen some people in the marketplace that will charge you 15% of the purchase of the crypto that you're actually looking to purchase. So, if with some of these other providers, if you were to place a $100,000 order, that's $15,000 just for them to place the order on their platform, plus the ongoing administrative costs for that. We don't require that. We don't have a minimum required purchase amount. We also don't require you to form a secondary entity. I've seen some providers that will require you to form an LLC or a trust to invest in, costing thousands of dollars an initial upfront cost in order to get that done. So essentially, we try to treat this very similar to what we worked with clients in foreign exchange markets, where they establish an account, they select everything to purchase, and we just charge a low flat rate for them to hold that exchange, and their account. So we definitely try to help mitigate those for clients as much as possible. One, by being very flexible and allowing you to choose the most fee advantageous wallet providers and exchanges that you'd like, by not having minimum required amounts and also not requiring you to go through the costly aspect of having an LLC or a trust established underneath of your IRA, and then maybe paying ongoing management costs to a manager or trustee services to a trustee in order to have those kind of things. So we try to give you the choice, flexibility in the price, and the ultimate ability for you to choose, what you know and understand in this highly evolving market. So with that, we're pretty much spot on with an hour. If people have questions, make sure you throw those in the chat box. We'll certainly be happy to get into those. I'll leave my contact information right up here. If you want to get specific with regards to how much a particular type of transaction would cost you, give me a call. It's not as easy as me just kind of giving quotes out, but essentially you'd be looking at less than $300 a year, for any type of crypto investing, at least for our annual fees. So we can certainly help try to, mitigate that and be as fee advantageous as possible for you to make as many good choices as you'd like. So again, fire out the questions. I am happy to answer those while they're coming in. But again, thank you everyone for joining us today. We really enjoy putting these on. We get great attendance, especially for some of these newer topics. So again, thank you for attending and driving the new presentations for these. We really appreciate it. Phil, I am actually not exactly understanding what exactly you're asking. With that, I do apologize. I try to do as much research as possible, but I just don't understand the question, unfortunately. Sorry. I'm certainly happy to, if you want to send me an email, I'm certainly happy to do research into it and get a more specific answer to you with regards to this. Always happy to do that. Again, people with raised hands, we do need you to type those questions in. I do not, all the mics are muted, so if you can please type those in. I do see that there is about 4 people with hands raised, Carl, Duncan, and Andrew. If you could type those questions in, I'm happy to answer them. The recording will be available probably, typically we get them up about a little bit later in the day. If not tomorrow morning, it will be available on our YouTube channel. So if you didn't get the whole thing, maybe a little bit later on today, maybe tomorrow morning, but certainly before Thursday, this will all be up on our YouTube channel, slides and recording. All right, well, if we don't have any other questions, we'll go ahead and sign off. Again, one question. Do you need separate wallets for each crypto owned? I'll call you later in the week. Okay, yeah, just give me a call, Andrew. Happy to answer them. But the answer is no. If the crypto wallet that you are utilizing will hold different types of cryptocurrency, if the wallet provider will hold Bitcoin, Ethereum, and Litecoin, you can use the same one for all of them. Not a problem. You don't have to have separate ones for our accounting purposes. Okay, Jim asks a good question. When the 21 million have been mined, who will be verifying the blockchain? Good question. I actually looked into that myself. So it's one of those things where the prevailing thought in the market is that there, instead of being a benefit for the miners to verify the blockchain and the reward of new Bitcoin, it would just translate into small transactional fees. So a portion of the actual transaction would be taken as a fee for the actual verification process. So that's what typically people will go to as a fee structure for going through and verifying the actual processes that have been done. So yes, there would probably be a small fee assessed. Duncan, send me an email, and I'm happy to get more of a more in-depth of an answer to that question for you with regards to index portfolios and percentages. Just if you can enumerate a little bit more in an email to me, I'm happy to get into that, but I just need a little bit more information so we can start the dialogue. Gary, yes, I have seen that where they say it would take 200 years to mine all 21 million coins, and that is based on the increasing difficulty algorithm used to determine the actual amount of proofs and hashes that go into proving this, but I would probably wager to bet that with the increase in computing processes going up at a relatively exponential rate, that it might take a little bit less time. But it's certainly going to be interesting to see, although it will be out of our lifetime, how exactly long it takes for all 21 million coins to be mined. Keep in mind that we have mined half of them already, but again, it will increase difficulty for those hashes to take place the longer it goes on. Yes, I would imagine miners will be around for quite a while. Jim asks, what happens if the internet is toast? Again, remember that this is a decentralized network, so there isn't one single repository for all of this information. It is a worldwide network of people that are utilizing proofing and using this network. So there isn't one place that you could point to where this is all held, which is one of the really cool things about it, is that it is decentralized and global. So so long as that there are people here and people using it, it is, has that inherent security in its user base to maintain, keep, and protect its network. Unfortunately, I would stay away from any speculation on price points and anything like that, Duncan. But I do appreciate the question. It is certainly internet-based, Jim, but it is not centrally based in one particular point. So long as that there are still people, keeping depositories of this information and keeping that current, it would still be a verifiable network to that extent. But to the ultimate goal, who really knows? But it is certainly a very interesting topic to look at. Well, it looks like that we have most of the people signing off, so if anyone does have any other further questions, shoot me an email. Glad that we had a good Q&A basis for this. But I do, again, I really appreciate everyone signing on today. Thank you.